Hi, it's Terri Robinson with the Remax Distinctive, and it's my pleasure again to bring back my daughter Nicole. From our previous video, we were talking about her being a first-time home buyer, and that brought up a lot of different questions, and it started to lean towards about lending. So with that, I said, hey, why don't we get together and let's take a look at the questions you have regarding lending, and let's bring in one of our favorite lenders here, which is Sebastian Rivera from Intercoastal Mortgage. Sebastian, say hey.
Hello.
So Nicole, I know we always like to jump right in, so let's just do that. What is your pressing, one of your pressing questions for Sebastian?
I think the first most important question is just the basics. So, how do I begin to prepare to get a loan?
Piece of cake. You speak with me. Number one, you always want to speak with a lender. The reason why is we're going to tell you what your purchasing power is. We're going to run your credit, look at your income, look at all of your financials, get a picture of where you're at. And based on that information, I'll be saying, hey, Nicole, you qualify for this amount based on the information you've given me. And many times, if there's something on your credit that I should be aware about, I'll let you know, hey, this needs to be fixed. But in most times, everything's going to look okay. And we're going to get you prepped with an approval letter, some estimates, payment charts, and let you know where you need to be to buy.
Okay, well, that was a lot of information. So, if you don't mind, I'm going to break it down a little bit. Um, so, finances. I remember in our last video, we talked a little bit about financial assistance. Can you tell me a little bit about, like, do I qualify for financial assistance? How could that work for me or people like me?
Yeah, of course. So there's state of Virginia. Every state has different programs. State of Virginia is one of my favorite ones. You got grant programs, 100% financing programs, 101.5% financing programs, subsidized mortgage rates, subsidized mortgage insurance rates. It's an awesome state to buy on. Lots of the things they're looking for is, are you a first-time buyer? What is your household size? And depending on that, what is your total household income? And based on this information, different grants, different programs will be available. Now, that being said, certain of these first-time buyer grants will give you 100% financing or give you some additional funds as grants. The downside is that they're going to have higher interest rates. So there's a trade-off.
Nicole, you do meet a couple of the criteria already in terms of you already have the information about, your household size, for example. So you have that. So it sounds like it's some of the basic information is really simple in terms of what people can already provide to you, Sebastian, in order to get started with grants. I think one of the important things here is to know that there is help out there for you if you're having issues with getting your down payment together or your other part of this, which is closing costs. So there is help.
Oh, absolutely.
So I am graduating from my master's program, so I will have student loans. How does loans play into my income, my overall net worth, and getting a mortgage or a loan for that?
So two ways it goes. Typically, if we don't have your loans deferred for more than 3 years, we're going to use either 1% of the outstanding balance or 0.5%. Now, which percentage depends where we take your loan, either Fannie Mae or Freddie Mac. Typically, we're going to go on the lower one. We are going to want to use 0.5% of your total outstanding balance. So if you owe, for example, $50,000 on student loan debt, we'd have to use $250 a month against you. Now, if your student loans are deferred until 2030, for example, I don't have to use any payment against you. Simple as that.
Okay, that's really good. And then the other portion of when you talked earlier, you talked about credit. So I know credit can vary, if you're going to buy a car or if you want to get a house. So what determines good or bad credit in this situation?
Number one, payment history. That's a huge one. Second one, the utilization and types of debt you have. For example, I have clients who have two credit cards, for example. You have two side-by-side clients. Each have a $1,000 credit card. One of them has $900 charged on the card, and the other one has $300 charged on the card. And that's it. That's all they have. The one with the 900 is going to have a very low credit score, 640, 650. The one with 300 is probably going to have 700. And that's just because of the level of utilization. So a quick tip here, 90 days before you know you're going to apply for a loan, bring down those balances as much as possible, 30% or below of the balance. That's going to guarantee you have a high credit score for sure. Because higher credit score.
So you said bring down the balances, so you should not close off any credit. Just bring the
Exactly
balances
right.
down.
Closing or opening an account will lower your FICO score. I'll repeat that again. Closing or opening an account is going to lower your FICO score.
Yeah, so
Okay.
one of the things that I like to always say to people is One, when you're applying to get a mortgage, keep your financial picture the same. So if they say, hey, you can get 10% off of that purchase just by opening up a store credit card, the answer is, what's the answer, Nicole?
No.
I, no, exactly. The answer is
Every
no.
lender is dancing right
But
now.
so, but you want to keep your financial picture the same. That brings me to another question. You have people in Nicole's generation that are, for example, sneakerheads out there, meaning that they do business and they trade sneakers and all of the money comes in cash, but they really can't account for it. What do you say to people like that, Sebastian?
Informal market. So if you have cash at home and you're looking to purchase a house and you're trying to utilize that cash, there are a couple ways around it. First one, you either grab the cash, pay your rent 1 month with it. Keep your paycheck in your account because we can document it. We're always going to ask for documented and verified sources of income. If you just traded, I don't know, a Pokemon card, like one of my clients is big on Pokemon cards. He traded a $13,000 Pokemon card in cash. I couldn't verify it until we were able to get a bill of sale. With the bill of sale and the purchase agreement and everything, we finally were able to verify it, but it wasn't easy. So my advice, if you have cash, deposit it into your account as quickly as possible. Or if you're coming up on the date that you're buying a house, use that cash to pay rent or use that cash to pay other things while your regular income is deposited in a verifiable source.
Sorry, I had one more. So we're talking about, our credit and all these sort of things. What is the timeline? So if I was going to get a job, let's say right now, July, and it's a brand new job, how long should I wait to have that history of my paychecks in my
Depends.
account or to be
It
able to
depends
get
who your
this?
lender is. Some lenders are going to require, if it's your very first job, up to 6 months. Some of the big lenders will require that. Most lenders in the area are going to require 2 months. More local lenders, specifically in the Northern Virginia area, are going to require either only one paycheck or, like us, all we need is a signed offer letter with no contingencies. I've had clients start their job on Monday and Tuesday we're closing their loan.
Well, thank you so much for taking this time. I know we could actually talk about this for a lot longer because there are a lot more questions. And yes, hint, hint, we may be coming back for part three. But anyway, thank you, Sebastian. Thank you so much, Nicole. I appreciate it always.
Of course, my pleasure.
Yeah, of
You have a
course.
great day.